morning, my name is James Hughes, Chief Market Analyst here at Scope Markets, and this is your daily briefing on Tuesday the 9th of June. European and US markets are set for a lackluster start to trading despite the S&P500 wiping out its losses for the year and trading back in positive territory. The optimism comes as traders continue to ignore the fact that the US has hit recession and pin hopes on the fact that recession may not last for very long. It's the improving economic picture as well as the continued easing of lockdowns around the world that has led to the extended upside as investors bet on government and central bank stimulus being readily available to continue to aid the recovery. However, despite the optimism on stock markets, many challenges still remain, and despite the stronger than expected jobs report in the US on Friday, the unemployment rate still remains at 13.3%. However, it seems that the buoyant stock market is not helping Donald Trump's quest for a second term in the White House. Recent polls have the president's approval rating at an all-time low of 38%, with his disapproval rating at an all-time high of 54%. It is most definitely Trump's biggest challenge to his presidency after a muddled handling of the ongoing coronavirus pandemic and widespread condemnation of his handling of the civil rights rallies across the US. It cannot be positive for a re-election campaign that an incredible 80% of Americans think the country is out of control. Today's economic calendar is looking fairly quiet as everything leads up to tomorrow's Fed interest rate decision. We have no data of any note from the US this afternoon, but out of the UK we do have M4 money supply set for release.